Head of Canada's housing agency today speaking out on a housing market forecast that fell rather flat. Maybe not speaking out, tweeting out, really. Evan Siddall coming out and saying the agency remains very concerned about the outlook for housing in this country, but he did acknowledge that CMHC's warning last year calling for home prices to fall as much as 18% from pre-COVID levels. And he's saying it was mishandled and his team isn't all-knowing on housing. Let's bring in John Pasalis of Realosophy for some insight on this. And John, when I think about last year in March and April, I mean, to be fair, if you had asked me after several years, not that I'm an expert, but for several years of covering the housing market, 3 million people just lost their job, Greg. What do you think is going to happen to housing? I probably wouldn't have said it's just going to take off like gangbusters. What do you think of Mr. Siddall's tweets today?
Yeah, I mean, I agree with you. I mean, at the time, I don't think their forecast was unreasonable. I mean, I think there was some reason to be concerned. I think the bigger issue, and the ones that he touched on, and I think the ones that a lot of consumers had, was that a lot of CMHC's reports were not about, forecasting that prices could fall. The tone was more about that prices will fall, which gave a lot of home buyers the impression that this was a foregone conclusion. And I think that's kind of the key takeaway that I took from his thread. And I think it's an important one, I think, when policymakers are communicating their forecasts in the future.
Yeah, I think that point well taken, too. On the other flip side of it, when Canada's housing agency, which speaks with authority on these matters, gives that kind of a range, I think in your business and financial journalism, we're used to ranges in terms of anywhere between this and that, but obviously we often gravitate to the most severe number. The most severe number in this case was an 18% pullback in home prices. That could have changed some people's minds about how they wanted to engage with real estate if they actually took that at face value.
Yeah, absolutely. And I think it did impact a lot of people's decisions to jump back into the market, at least in the beginning, because you're right. I mean, there was a time of a lot of uncertainty, extreme uncertainty in the housing market and in the economy. And I think people did certainly gravitate to the potential worst case scenario. And CMHC was quite clear about that. They're not necessarily forecasting an 18% decline. I mean, that was their more pessimistic outlook. And the more optimistic was a 9% decline. But the reality is, I mean, as you mentioned, I mean, nobody really ever could have predicted that the housing market was going to respond the way it did. I mean, this is what we're seeing today are really just behavioral factors that are driving demand in housing. It's not so much, macroeconomic factors. I mean, no one really expected home buyers and homeowners to react the way they did to this pandemic.
Okay, of course, now the key is we all know what happened in terms of who lost their jobs, all the government supports, mortgage deferrals, and the housing market taking off. Earlier today, we had Benjamin Tal on, Deputy Chief Economist at CIBC, and he talked about what this market could bear if mortgage rates started going higher. I'm going to play the clip for you, and then we'll hash it out, John.
It's all about the speed at which rates are rising. And if we see another 30, 40, 50 basis points increase in rates that will be translated directly into mortgage rates in Canada, I will be very concerned because this market is not ready for a brief 100 basis point increase in mortgage rates by any stretch of the imagination.
All right, John, so I want to get your reaction to that. I mean, a 100 basis point jump would be a big jump off of record low levels. Do you think the mortgage market and the real estate market at all, is that attuned to changes like that now that could put a break on things?
Yeah, no, I don't entirely agree with Benjamin. At the end of the day, rates were 100 basis points higher a year ago. And, who is this going to impact? I mean, it's not going to impact anyone who's renewing a mortgage today. At the end of the day, most people who are renewing today, their mortgage is well above 2% anyways. All it's going to do, even if your rates go 100 basis points higher right now in the housing market, is just going to take a little bit of the demand out of the market. I mean, it's not going to impact existing homeowners. It's not going to impact the people who just bought a home because they're locked in for 5 years. So I don't agree that it's going to have a dramatic negative impact on the housing market in the short term. Definitely not.
John, you've done great work over the years and come on the program and shared it with us in terms of speculation, more so back in 2016 and in Vancouver, 2017, when things really took off here. It seems that policymakers are at least opening their eyes, maybe their ears a little bit to the fact that some people might be buying real estate, again, with that old idea that home prices go up forever. Are you starting to see that in the market?
Well, we started to see a lot more speculation in the first quarter of this year. People just flipping houses that they bought 6 months ago. I don't think that's going to be a trend that's going to continue. I think people were just doing that because, I mean, really, it was just lucky that prices accelerated so quickly. I think what we're seeing now is, when we talk about this exuberance in the market, it's primarily from end users who, have this feeling that they just needs to buy now or they're never going to be able to afford a home again. And I think this is really just driven by both the narratives from CMHC, when they're told that house prices are going to collapse because of a deep recession and they don't, it fuels sort of this overconfidence that home buyers end up having. And when, the Bank of Canada is very optimistic about keeping prices going, it just makes people feel like they just need to get into the market now and leads to these really, really high prices we've been seeing in the housing market.
Then we have a problem on the other side where you get that kind of demand, the fear of missing out, basically what you're talking about there, but the supply just isn't there. Are we back in that kind of situation? I think you and I had discussions about this 3 or 4 years ago where, yeah, it's fine that people want to pay that much money for the asset that I have, which is my house, but if I sell it, I'm going to have to find another one. I'm not sure I want to be in that game right now, given the conditions of the market.
Yeah, I mean, when we think about the supply narrative, I think a lot of people are focusing on the inventory, which is very tight. But when we actually look at the number of new listings coming on the market, the fact is that they're actually up about 30% year over year, and they've been up around 30% since June. So since the second or the third quarter of last year, including the first 2 months of this year, new listings have actually been up. The problem is inventory is tight because demand is up more than 50% year over year when we look at sales. So the fact that, the reality is when we have this massive demand shock when sales are up 50%, you can never really have enough supply to keep up with that. So I think what's going to happen is once that demand shock wears off, we're going to see the market probably balance out again in the near future.
All right, John, it's always great to get your insights. Thanks so much for taking the time to join us.